TSX headed at this stage for another record high close. Our guest says, though, the S&P 500 still looks like a better bet. Wow, you can see, though, over the past year, our market has nearly caught up with that US benchmark. We're joined by Jim Thorne, Chief Market Strategist at Wellington Altus Private Wealth. Always great to see you, Jim.
Hey, Andy, how are you?
For now, you'd be putting money into the US market.
Yes, I think with President Trump getting elected and his team and his cabinet, I think the nomination of the new Treasury Secretary is very bullish for the markets. So I look at a market where you've got deregulation, you've got a pro-growth strategy, and you've got tax cuts. Whereas when you look up here, I don't think we have an industrial policy. I'm not seeing tax cuts. And I think Canada is in a holding pattern until we see whether or not we get a new administration in Ottawa.
We'll get back to that because we want to get your thoughts on that. Just sticking with the S&P 500, though, you see a good chance of it hitting 7,000 next year and then going on to peak around 7,500?
I think this phase of the cycle, Andy, goes into about February of 2026. And at that point in time, we get close to 7.5. And then we're due for a nice correction. And then, but I think with Mr. Trump in, I think what we've got to do is start thinking about his term will be extremely bullish for risk assets, and we should think about the S&P being somewhere between 14,000 and 15,000 by the end of his term.
Whoa, after
it's
4
that
years.
type. It's going to be that type of an environment. Yes.
You think U.S. stocks could more than double during the course
Yes, we're
of
in a
Trump,
renaissance. We're in a renaissance, a Gilded Age, the Roaring 20s. Mm-hmm. But if you get a period of time where they're deregulating, they're attacking government over, inefficiency, tax cuts, and you get innovation kicking in, then we have one of those generational times where we're going to have a 4-year period where I think we're going to have a generational bull market.
Partly because of the, the tax cuts and the deregulation. What about concerns, though, about that ballooning U.S. deficit? Is that not going to be a hangover for the market?
That's where it comes with Doge or Elon Musk. So you're going to get, you don't bet against Mr. Musk. So you're going to get $2 trillion cut out of the government budget by July 4th, 2026, the 250th anniversary of the signing of the Declaration of Independence. So this is going to happen fast and furious. Think about what's happening in Argentina, where they've been attacking it. And notice that Mr. Milei was at Lagomar at election night or just after. You're going to have inflation coming down, and you're going to have government spending being a drag on economic growth, like we talked about before. Remember in Canada, second quarter GDP growth, 80% was government. I would expect if Mr. Poilievre gets in, he is going to attack the government inefficiencies just the same way as Mr. Trump's administration is. So the private sector contracts. I would suggest to you that the Bank of Canada understands this and the Fed understands this, that this is going to give them the impetus to cut rates further than people think, which is going to be very good for risk assets.
This is in the United States.
And Canada, but I think Canada is going to lag because of the fact that when do we get the election? And when we do, if Mr. Poilievre gets in, how quickly can he implement pro-growth strategies in Canada?
What are the pro-growth strategies you think Poilievre could bring in?
He's got to basically create an environment to attract capital back into the country. He's got to stop taxing and attacking capital formation in the private sector. I think he understands that. I think there's a lot of folks around the world, at least from the people that I talk to, that are waiting for a change in Ottawa. Then I think we would be surprised at the amount of money that's going to start to flow in. I think there's a lot of good leadership coming right now. I mean, just look at Danielle Smith, the Premier of Alberta, going down and negotiating with Americans, getting prepared. Doug Ford doing the same thing. The premiers are becoming proactive, but we need Ottawa to come in as well. And when we do that, what's the lag and what's the delay? I mean, here's the problem, though, right? When you think about it, look at the job growth that just came out today. Negative, 57,000, right, for Canada. So, the Canadian economy is close to a recession in the private sector, and the Bank of Canada is still too tight. They have to cut. And Mr. Macklin is on record saying the lags are 18 months. The positive to that, Andy, is when you start reading the recent speeches coming out of the Bank of Canada, they understand that. And I think the risk for all of us up here is the fact that they've been too tight for too long, and interest rates go below 2%. And we get into this period like we did before COVID, where growth is really, really slow, and we need a pro-growth strategy in this country. When you say that the Trudeau government has attacked capital formation, are you thinking in particular of the increase in the capital gains inclusion rate? That you can talk about the carbon tax. Let's talk about. I was in Newfoundland a couple of weeks ago. Why aren't we building the LNG? Attacking the LNG facilities and building it. We've got the feasibility study done. Canada has been blessed with natural resources, and we have a policy, a team in Ottawa that doesn't want to exploit that. The Americans are talking about the fact that they need Canadian electricity. What are we doing? What is our forward-looking stance? Why aren't we going down to Washington, D.C., which I lived for 15 years, and sitting there saying, how can we fit into your plan? What part of this semi-supply chain can we do up here? Is it testing? Is it packaging? But we're not doing any of that. And even the Council of Foreign Relations is talking about this. So I would suggest... What are they saying, Jim? Sorry. Well, they're saying that Canada or North America has to look... It's not globalization anymore, Andy. It's regionalization. And the only area in the world that has not really embraced regionalization is North America. Right? And so we need to basically embrace what the Americans are doing and figure out how we're going to, participate and benefit from it. Paul Martin Sr. in the 1960s went down to Texas and signed a massive deal with Lyndon Johnson, the vice president for Kennedy, and that was the Auto Pact. We need to start thinking progressively and forward-looking on how we're going to fit into the evolutionary process of the largest, most dynamic economy in the world. On that note,